welcome to TraderMerlin Show for your Monday, a limited trading week out there. Yes, I'm a limited trading week, as you guys know. I'm doing today's show, and I'm going to do Wednesday's show with Bill Addis, and then I'm taking Tuesday, Thursday, Friday off, going to Las Vegas. I'll be back on Tuesday, so it's going to be a wild ride. I had a nice concert last night with Larry Jacobson. It was fun to get him out of his shell, to see some live music. Went to Fish Up at the Forum, so anyway, hope you're all doing well. If you are, give me a little shout out there. I had to switch over a whole bunch of things, so this whole office got turned around into kind of a photo room over the weekend. So we had a little festivities at my place. But hopefully the audio sounds good, microphone looks good, video looks decent. So we'll just take it as it is. So again, hello Pepper, Jim Base. We got Margaret. Good to see you as well. Amy, we have Amy joining us. Yes. Amy was over for the festivities this weekend. We have Terry, Aiden as well. Aiden's probably loving the backed news. We'll talk about that here in a second. Ken, Siraj, we got Jerry, Michael Tremblay from rainy Boston. Good to have you, Michael. Johan, Ivsy, Dana. We got a big group today. Jimmy T, John, David, man, all kinds of good stuff. Rob, yep. All right, so I guess this was going to be the topic to start with, which is stagflation. But you know what? Since Backed has been this redheaded stepchild, and I apologize to anybody who might have red hair, this is one of those ones that was just, I was so irritated on Backed. And for those that might not remember, I was talking, God, it was a year ago. I bought 1,000 shares of it was VIH at the time. It was a SPAC that was buying Backed, and Backed was this company that claimed that they were backed by ICE and the New York Stock Exchange and going to be the institutional clearing firm for crypto. And I thought, wow, if Coinbase is going retail and Backed goes institutional, way more money in institutional. I was all on board with Backed, thinking this is going to be it. And all of a sudden, they changed their tune and they're like, oh, well, we're just going to do, you know, a little card that you can maybe buy some Bitcoin or buy some coffee with your Bitcoin. I'm like, it doesn't really sound that good, and it felt like kind of a bait and switch. So anyway. Am I red today? Well, you gotta let me know these things, Michael. Apparently I am red. I thought I cleaned it up, but I'm a little colorblind. So I'll show you the chart of Backed here today for those that might not have seen it. Backed did just a phenomenal day. The news was that they're going to be used by MasterCard, and here you guys can see Backed today is up 266%. Like, holy cow, 266%. Gotta love a day like that. Hey, Don, good to see you, and good to see Lisa and Rob as well. So, just for all of you, you guys know I averaged, my average price on Backed was, let me go to .d here. My purchase was way back here. It must have been in March. I was in around 15 bucks, actually 15, not around. It was actually exactly $15, which was right about here. And seeing today's news, as soon as I saw it, I was like, oh, let it run for a second. And funny thing, and I'm sure some of you may have sold, I sold all of mine. I sold out at 17. I was just like, you know what, I'm out of it. I'm done with this one. I'm glad I sold out at 17. And then you look at rallied another $13 intraday. Nothing like leaving $13,000 on one trade on the table for no reasons. But you know what? After all that was said and done, I made a profit on this miserable trade that it was underwater for like 9 months. And who knows where it's going to go from here. The news again is that MasterCard will be using them for purchases. And I guess it begs the question, how many of you that are holding crypto? This is the most important question of it all, is those of you who are holding crypto. I guess what this is designed to do is if you now have a MasterCard, you can use Backed to make purchases and will convert your cryptocurrency into dollars on the spot, which sounds great, but I'm really not spending my crypto. Like most of mine, like say 99.9% of it is going to be HODL. I'm holding that stuff. Now, every now and again, I may make a purchase. Like I bought some FUG like a year or so ago at this little restaurant that supported Bitcoin, and it was a clunky and messy interface. And maybe it makes it easier, but you know, is it really that piece that's going to boom back to 30 bucks or even higher? Who knows? So for those of you who dumped it today, congrats, good, get out of that thing. For those of you who are holding it, there may be some higher highs here in the future. Who knows? Just looks sketchy to me. It was a kind of crazy one. Oh gosh, your friend bought DWAC. Oh boy. Well, I guess there's a lot of people on this channel that were talking about that one as well. So 1050 sold at 1130. Yeah, well, if I could buy puts, I would do as many as I could on that one, Don. DWAC. Let's see what happened to DWAC. Today was down, last time I checked, pretty substantially. Only down 7% today. But, coming off those $170 highs Yeah, on Friday's session, here we are now at 83. My guess is you'll probably see it keep drifting down. Gotta love a pump and dump scam, and sure, Mr. Trump is enjoying that one. Oh yeah, I am, Rob. I mean, look, would I love to be here today saying, hey, I dumped all my backed at $30? Of course I would, but I got no reason to lie to you guys. What's the point? If you guys want lies, and there's a Chicago trader that can sign you up for his courses, take that. All right, whack is whack. So let's start on this discussion, and then I'll go into what happened out there in today's markets overall. So, when you look at the discussion right now circling, it's been heavily inflation, and I think we had varying opinions here with everybody with regards to how inflation is impacting us right now. It's starting to rear its head. And, we had that talk track from the Fed saying it was not an issue, then it was transient, and then it was moderate, and now it's significant or elevated. And even other central bankers are turning to Powell going, hey, man, this looks pretty high here. We might need to do something about this. So, that to me is the discussion we'll see go through the end of the year, but there's a combination of events that could lead to something far more sinister, which is stagflation. And inflation by itself is not that big of a deal. It's easy for the Fed to control inflation. You simply raise interest rates like Volcker did in the 80s to the tune of about 16, 17%. And no, Don, there are no options out for it. That's why I was saying if there were options, I would have loaded the boat on Friday's session when it was up at 150, 160. I was like, this is crazy for what it is. So, sorry, Margaret, I couldn't help myself. The inflation side is easy to control. You remove money supply or you raise interest rates, and that would be the simplest way to do that. But that starts to create some other problems. So we hear the talk track about stagflation, which is really where you have slowing growth and increasing inflation. But there's two other variables I wanted to look at here today, and maybe we can formulate our own opinions. Now, unfortunately, when I move my desk around, I lost my drawing device, so I won't be able to draw like I normally do on my picture, but hey, we'll just make do as we go. All right, so let's go to the first element here of stagflation, which is a pretty easy one. I think everybody knows this. It's going to be slowing growth. Now, when we look at some price charts here of growth, and I'll just, there we go, that one. Oops, why are we out of line? There we go, I'm messing up. When you look at GDP, that's probably the most general measurement of growth that everybody is doing. And you look at the hard red edge of this chart, it doesn't appear that growth is slowing. It actually looks to the contrary. It looks like we're starting to see, increased growth here to the tune of 6.5% was the previous number that came out. Now, who knows how that trajectory is going to go? That said, on Thursday, we do have a GDP number coming out, which would be interesting. That's going to be Thursday. I believe it's an hour before the markets open, and the expectation right now is that GDP is going to be 2.8%. So, you have this 3-month run here where it feels really nice and smooth, and all of a sudden we get the quarterly run where it was nice and smooth up, and all of a sudden this quarter is going to be much lower. Expectation is 2.8%. Now, I say that because of this. I'm a firm believer that data is A, it's manipulated, and B, it's a strategic piece to get people to buy. So they've lowered that bar from 6.5 is what the previous quarter was. Now they're going to say it's 2.8%. My assumption would be, and I could be very wrong here, is that they lowered that bar so low that we'll come out at something like 2.9 or 3%, which is higher than expectations, and everyone go, oh, wow, it's better than they thought. The reality is we're going to go from 6.5 down to sub 3, in my opinion. And if that happens, that's a sign that things are clearly slowing down. Although it's one quarter, it doesn't mean that this is completely done. If you look at where we were historically, if we get down and stay somewhere in the 2 to 3% GDP, that's fine. That's fine. Stay there. That's great. It shouldn't, anywhere in here is going to be fine if it stays in. Now, if we get sub zeros down in here somewhere, then we start to have some issues, and then the stagflation experts can, rear their ugly heads and start talking about it, and I'll have to get John O'Donnell back on the program here. So step number 1 of this was growth dropping. Right now, I'm going to put an X right there just because I feel it's slowing, and I feel it will slow, but it's not slowing this second, right? And again, we'll revisit this in 6 months and see if any of these have changed, but we haven't seen growth really start to show significant declines. The second step of stagflation, and most people look at it as two faces, I'm going to show you it from 4 perspectives, would be the inflation side of things. Now, I think when you look at inflation, this chart here of consumer price index, which isn't the go-to end-all for inflation, it's just one of the major metrics, meaning what are you and I paying for goods and services, you can see historically it's not like it's off the charts high. Now, if you go back 3 months ago or 4 months ago, we were getting to levels like, uh-oh, this could really be a problem, and we've come crashing back down, at least to 0.4. It still is historically a little higher than average. Now, my problem is I don't believe the data. As I mentioned, we had a guy who used to work for the Bureau of Labor Statistics. This was on Power Trading Radio, like, it must be 8 years ago. And I specifically asked him, I said, with data like CPI, do you guys, change or modify that to meet a political agenda? And he goes, yes. He didn't even pause, didn't think about it. He goes, yes, we do. They will remove components or swap out components which have really high inflationary pressure so it doesn't skew the index. I'm like, well, isn't that the freaking point of the index, to show me when things get out of whack? And then we also have sizeflation, right? I've talked about this many times. My old example of red stripe beer. Red stripe beer used to be 12 ounces. Now it's 11.2. It's like, well, where did that extra go? The beer is the same price, which means no inflation according to CPI index, but now the volume I'm getting is less, so if you charge me by the price per ounce of beer, I'm paying significantly more, and we see that across a lot of different products. Used to be, a half gallon used to be 64 ounces, I believe, and now all of a sudden I'm seeing 58 ounce half gallons. Like, well, that's not a half gallon. Half gallon's 64. Anyway, I think that's the part of this I don't agree with. I think that most of you probably would agree that when we look at this inflation aspect, that it is in fact rising. So we can put a check mark on this one that, yeah, I think we would all agree inflation is there. Let me see, I might have missed some comments here. Didn't he say that there is another round of transitory? Well, he said now that it's elevated. So elevated is his current talk track, right? What else do we have here? Janet Allen says, don't worry, they have inflation under control. Yeah, right, Big Ab. I would not agree with that one. I think that it could be one of these things that just continues to snowball, and if it does get out of control, because, I mean, keep in mind, since this pandemic started, they've pumped in $32 trillion worth of new debt. 32 trillion. I mean, at this point, it is funny money, right? And when you have that kind of money coming in, again, we've talked about this many times, that is a clear-cut road to hyperinflation. And right now, cereal box is getting bigger, content's getting less all the time. I think it's the cereal box is staying the same size, but the contents are getting less. But yeah, a box of Cheerios they're using in the CPI metric is a box. Well, the contents have gotten a little smaller and smaller. I had an interesting one I showed you guys a few months back with candy bars. And if you go back like 5 years ago, the candy bars were like 20% bigger. Well, that to me is inflation of prices. So I think we'd all agree the inflation is definitely hitting the check marks here. Now, this is one where it's more of a leading indicator, I think, and that's going to be looking at things like earnings. Now, typically in stagflation, earnings are on decline. And I'm going to just go ahead and put a check mark right now on this one. Or, sorry, not check mark, an X on this one. Because I would argue that earnings are not declining. You look across the board, I've been doing earnings announcements all week. We have earnings are great. They're beating your expectations. So the earnings numbers are looking decent. Granted, they're down because of COVID. But is it really on a downward trajectory, or are we're seeing each quarter's earnings numbers get higher and higher? So we haven't seen this change yet. But remember, I believe it's kind of cyclical. When one piece of data hits another one, then all of a sudden you get this domino effect where one piece will just kind of collapse another data set, which leads to earnings here. So let me get to the final one here, because I don't have a chart for earnings. And then we can wrap up our stagflation discussion and get to a bunch more. Vasily, no, I'm not in backed. I sold out 100% of mine at 17:05 today. It's just got out, and of course I'm looking at it at $30 going, I should have held it. I don't care. I bought it at 15. I'm out at 17. I'll take $2,000 profit. Done. A little bit longer than I wanted to, but that soap opera is done for me. All right. Our last one here is unemployment. Now, unemployment's interesting because if we look at the chart of unemployment, you have what looks to be great unemployment numbers. I know you're looking at it going 4.8%. That's not great, Merlin. It's great from the perspective of where it was, right? We had astronomically high inflation, looking at almost 20%. It was so high. But, 15% is still very lofty. That's what we had back in March of 2020. Now we're at 4.8, which if you remember the talk track from the Fed, this was back when we were in 2008. The Fed said that I believe 5% or 5.5% would have been considered full employment. Well, we're already below that. And I'm sure they want to target this, getting down to 3% or sub 3%. But right now, 4.8 is not that bad. And we do have a very strong trend to the downside here for unemployment. And from what I'm hearing from almost everybody that I know who has a job, there's plenty of jobs. It's just that people aren't taking them, whether that's fear of COVID or inability to work, or some like I know that just don't want to work. So, when I look at this four piece here, growth, when you looked at the GDP numbers, they still look pretty decent, not appallingly bad. So I'm going to say right now, growth isn't an issue yet. Inflation is. Earnings, I would say, is not. And unemployment is not. So right now, if we look at October 25th, you look at stagflation, I would say no. Now, I think if we were to forecast and go out 6 months, let's just say we go out 6 months and we find ourselves in February or March of next year, I think that this whole thing changes. Let me clear all my artwork because I'll just kind of hypothesize here and maybe I'll revisit and wave my finger and say, see, I was right. Let's erase all ink on slide. So I think in 6 months you're going to see growth check mark because it'll be going down. I think your GDP numbers are going to start to decline simply because of the removal of money supply, because the federal spending is going to be going down. I think you're going to see a lot of that cut back. A lot of people who had savings, we were at record savings numbers in the U.S. A lot of people have just been buying like crazy. So you have this surge. I think that pushes the retail sales numbers up. Therefore, you get nice economic growth. But remember, dollar's been rising. So a strong dollar starts to hurt economic growth. And I think that trend's going to continue until, something happens on the bigger stage. So I think we'll get that growth decline. I think inflation is going to continue. This one might actually be force the Fed's hand much sooner than later. I think earnings are probably would be the last shoe to drop. I think that earnings are going to start to slow down a little bit, not substantially. I just think that the chart we've seen from the equity markets, and let me bring up one second. I got multiple screens here as usual, and to reassemble everything. Look at that back. That's just incredible. But if you look at the SPY, of course this is going to translate to record earnings. You had all-time highs yet again today, right? So this is going to be boding pretty well. I mean, it does kind of imply that businesses are doing great, that people are out there shopping. And I was out shopping recently, and yep, in fact, they are doing a whole bunch of it. So, I think earnings are good for now, but at what point do we all, I'm talking about myself and you, my viewers, and your friends and family, go, you know what? I've got some money in the bank. I should probably save that because, I don't want to spend it all. I'm hoping that we think that way as opposed to just go spend everything, because right now we have record debt as well. So you got people spending beyond their means. And in a minute, we'll talk about where to go potentially invest for this. Housing is another area where we're seeing extremely strong moves to the upside in the housing market. And if that continues, obviously that allows people to leverage more and buy more assets with it. But if we do get rates rising, right? If we get rates start to spike up, then all of a sudden that chokes out the housing market, which means people may put themselves in a situation where they've over-leveraged like in 2007 and 8, and all of a sudden we start to see defaults again. Then all of a sudden, not only do earnings drop significantly, but then all of a sudden we see unemployment numbers start to spike. And that could be the recipe. My guess is if it does happen, this will be late next year. I don't see it happening this year by any means, but I think we'll start to see some signs when the data is starting to slowly trickle down here, and we see that GDP growth roll over. We see earnings numbers start to miss for some of the major companies out there, and then unemployment will start to spike back up, and hopefully not spike. If anything, it should be a slow build, but we'll have to wait and see. Anyway, that's my crazy hypothesis, and we'll see how it has to. We'll have to wait and see. But I wanted to bring up the stagflation piece because I was listening to an interview with Muhammad Al-Arian a while back. And, he is one of the most at least from my perspective, respected and, I guess, level-headed people in the financial markets. And I've always kind of looked at him and really absorbed what he says. And he says, the thing that nobody wants to see, he goes, me, the markets, elected officials, is stagflation. This is probably the worst thing that we could see. Deflation, fine. Inflation, fine, because it's almost a one-dimensional animal. When you throw in stagflation, you have multiple components. And when we look at this little grid matrix that I made here, this little arrows up and arrow down, yes, I am, Lisa. I'm absolutely saying history repeats itself. If you look at this, what do you do to fix slowing growth? Well, you pump more money into the economy, right? So if you try to fix these one by one, so if I try to fix this guy, let me erase stuff. I want my drawing pen back. If I try to fix this guy here, growth, well, I print a whole bunch more money. I do infrastructure bills, etc. But what does that now lead to? That leads to higher inflation. So if I print a whole bunch of money and try to stimulate growth, what's going to happen is I will not only stimulate growth, I'm probably going to stimulate earnings because we'll see that move up because people now have money and they're spending more. And of course, we'll probably be roaring and at full employment. But all of a sudden, inflation will be surging as well. And that is the piece that they can't let happen. That's the part of their dual mandate, right? So what happens if you try to control inflation? Well, you have to pull money supply out of the economy, which would slow growth and slow earnings, which would further exacerbate this problem, and that would spike unemployment. So it's this catch-22, damned if you do, damned if you don't thing. So we'll see what happens. I hopefully we don't get there. I mean, you guys know my cynical, smart-ass kind of humor is like, well, look, I'm okay with stagflation. I'm okay with any market dynamic, whether it's inflation, deflation, stagflation, hyperinflation. I don't care because I'm going to position myself appropriately so that when the proverbial doo-doo hits the fan, I hopefully have some positions available that will capitalize on any market movement. So now that we got that out of the way, history not only repeats itself but also rhymes. You can only pass on increasing prices for so long, right? And as consumers, right, we'll be looking at goods and services saying, at what point do we look back and go, you know what, I'm not going to pay those prices. It's too much, like we looked at talking about used cars the other day, where you have increasing prices more and more and more. Well, at a certain point, as John O'Donnell would say, the only cure for a high price is a higher price, because ultimately people will look at it and go, no, I'm not going to pay that. So with the stage set, I think the new way I fight inflation is to buy nothing. I'm with you, Rob. I'm actually a new way I fight inflation. Is that by crypto? All right, so let's go and tackle another question, which is, if in fact we do get stagflation type environment, what do you do with your money, right? That's the ultimate thing, is how can I not only preserve my capital, but make more with it? And if you look historically at inflation by itself, that's an easy one. With inflation, you're really looking at, let's buy something that is inflation resistant. Of course, the easy one there is gold. And, Brendan's not here today. I bore Brendan now. He's above me. He's going to start his own show here soon. But if you look at gold, that's been just that historical one we always run to. It's great. However, there's now proxies or surrogates we could be using. And what do I mean by that? Well, if you buy physical gold, let's say you've got some gold bullion, you got some bullion, you got coins, whatever it might be, you have to find storage for that. And if you're doing any sort of quantity, it could be problematic in finding storage. You have to pay for secure storage, etc. So what I would probably be doing is I probably won't be buying physical gold. I already have enough. I have enough gold coins. I might grab another couple gold coins just because I like them and they're fun to hold and play with. But again, there's that risk. You could be in the GLD ETF, right? There's the gold one. But I really have an issue with gold futures or just futures products. If you look at the way that BITO, the new Bitcoin ETF, is structured, all of a sudden they're having problems. They can't even buy enough futures product. We talked about that last week when I talked about the goods and bad of the BITO ETF. Right now they're talking about buying other derivatives. They're talking about buying, companies like MicroStrategy in a Bitcoin futures ETF. I mean, you're not even living up to your objective. So I don't trust Bitcoin ETFs. A physical one I would. What I would do is probably go into something like, I would go actually into the crypto markets and buy like Paxos Gold, which is digital gold tokenized. I don't have to pay the storage. It's easy to get in and out of. It's very liquid. That's number one, would be the gold or gold proxies, right? Number two would be your historical go to bonds. And of course, bonds would not be great because of the rising rate environments, the price of your bonds would drop. Then the argument is, how about tips? And we talked about tips quite a while back with Bill Addis, who will be the guest on Wednesday's show. But, with tips, while they sound great, and for those who don't know what tips are Treasury inflation protected securities, and not the premium, the cost basis is adjusted for increases or decreases in yield. So if we are in a rising rate environment, we see it moving up, moving it up, then tips might be a great place to go because they will readjust to the changing market environment. Now, they're great in rising rate environments, but if you look at what the current yield of the tips are, it's negative 1%. So you're literally throwing your money away by keeping in tips. Now, this was great if we go in an extended run up. If we get a real strong run up, great, right? Then all of a sudden you'll be getting yields of whatever, 2-3%, but that would necessitate a significant move considering that the 10-year right now is nowhere even close to 3 or 4 or 5%. So that's the one alternative a lot of people look at is tips. I'd say probably not. At least I wouldn't be. Now, the other one here, we talked about gold. We talked about a little bit about digital gold using things like Paxos Gold. Then the other one here that a lot of people talk about is real estate, which, we had our most recent number on the Case-Shiller Composite 20 Home Price Index was showing 21% year-over-year growth. That's amazing growth. I think we would all agree that cannot sustain itself for a very long period of time, and maybe that dog has run their course, run that track. So real estate would be a normal one. I pulled out of all my real estate in 2016, which of course, you look at some of the market gains, all my investment properties, still have a couple pieces of land and my primary home, but all my investment rental stuff, I pulled all that out and put it into other assets that I thought would be more productive. And I think that's the important piece. If you are looking at a stagflation or deflationary environment or even inflationary environment, you're looking at periods where the markets will have a tough time. And if the markets go flat, but inflation's at 5%, I need to be making more than 5%. Otherwise, I'm just losing money to inflation. If the markets go down 10% and inflation goes up 10%, then in theory, I'm losing 20% because I got 10 for inflation, 10 for the equity market. Again, I need to find something that's going to be beating that rate of return overall. And for me, as you guys know, I'm pretty big on the crypto space. I do think that there's a great future for it. And I do think that as an inflation hedge, something like Bitcoin, I'm not talking about all these other altcoins, etc. It's called PaxG. So Rob is looking at the digital gold. I'll bring it one second. Let me bring it up for you. And it's just one of many, but from all the things I've been reading about Paxos Gold, it's legit. It's not a fly-by-night thing. It's stable and has assets. So let's go. Whoa. Paxos. P-A-X. Here, PaxG is a ticker symbol, but you have to go to a crypto exchange. It's not an equity. So here's Paxos Gold right now trading about 1808. That's your current price there for Paxos. So yeah, this is a token. It's on the Ethereum blockchain. It's got $322 million market cap right now, and it's just an easy way for you to capitalize on investing in gold rather than investing in physical gold. So just one way to do it. Yeah, Shiba Inu, man, you're still on that trade. It's funny. I actually, Don says 50-50 Bitcoin and Shiba Inu. I actually will be logging into my account tonight with my Crypto Investor Live program, which happens tonight, and selling out Shiba. We bought some for fun, which is almost doubled, and it's just way too much for me to even be holding of a shit coin. So no, I'll be getting out of my Shiba. But no, it's funny, Don, you mentioned that. I did a show a while back talking about, if you had $10,000 to invest in crypto, what would it be? And, Shiba Inu has a place in the portfolio, but it's in the small sliver of Gamble, which is like a 5 or 10% portion of your portfolio. And even that, let's say it's a 10% slice, could you put 2% in there? Sure, 3%, but you certainly wouldn't want to go over 10. That is a straight gamble play, in my opinion, but I know other people think it's great. It's a pump and dump coin that has really no predictability. It's just a scam coin that has no use case scenario. But you know what? You can buy things that have no use case scenario and make hundreds of % rate of return. Good luck with Shiba Inu. Margaret, what positions? If I don't mind sharing, what do you mean? Which positions? I go down rabbit holes sometimes, and I don't know which ones you mean. I closed out a bunch of stuff today. I had GE today. I had Wabco. I closed out today. I closed out all of my backed. I also had some. It's funny. I didn't realize I bought backed warrants. So I logged in this account. I'm like, I had some warrants on backed, which have went up massively today. I know you're not done. But yeah, I got out of the backed ET or warrants. What else did I sell out of today? Oh, I had some Boyle. You guys caught Boyle today? Yo. Check out Boyle. So here's your Boyle chart. Nice move up on it. It came right up into this area that I was thinking of selling at anyway, so right around that 82, 83 mark. So I just dumped out of my Boyle today, which is fine. You love a 22% gain in a day on Boyle. Pretty impressive when you're. I mean, it's tricky when you're going, triple leverage long, or triple leverage short. Excuse me. Super leverage long. Hey. What else? 50-50. Rand Paul thinks crypto, not Fed coin, will be the world reserve currency one day. I saw that, Jerry. That's interesting. I disagree. Look, I hope it does, but I think we would all agree that if you had a monopoly on anything, right? So pick a business. Doesn't matter what it is. You guys can all run your own business, and you're the only one in the world that can have, or at least representing your country, that can have that product or service, and something shows up that basically threatens to take that all away from you. Are you just going to sit there idly, or are you getting out your machine guns and saying, I'm taking people down? You are not taking this away from me. Right now, the power that the U.S. have, that's the only thing of value that you would say from a monetary system perspective is we're the reserve currency. If we lose that, we don't have much clout. We don't have much pull in the global economy. Yes, we are the biggest economy, but having the reserve currency for all these different asset classes in dollars, priced in dollars, is kind of what makes America as big and powerful as it is. So, we run the risk of losing reserve currency. We run the risk of defaulting on our debt. Those two things right there to me would completely change our country. And I just don't believe that they would allow that to happen. There's just no way. I can tell you if I was a Senate member and they're like, oh, we're thinking about, gold's going to become the reserve currency. It's like, okay, all right, well, let's all go. We're 330 million Americans. We got more guns than anybody. We're making sure that ain't going to happen. We're staying reserve currency for a while, but they're not going to allow it to happen. Is Dogecoin in the gamble portfolio as Shibu? Yes. Dogecoin is a meme coin. It's starting to have slight use cases, like a couple of, the Dallas Mavericks are going to allow you to pay for season tickets with it, but really it's not. It should just disappear. Dogecoin's a joke. Okay, what about UGA or USO? Well, I wouldn't mess with USO because oil's a tricky one. If we start to see inflation hedges, I mean, obviously, when things start to get out of hand like that, consumption of different materials will stop. And I think the USD. If we see the dollar index, I have my wrong charts up here, so I'm trying to figure this out. Real sec, let me fix this, and I'll bring up my TradingView, which is a much better platform than what I'm using over here. Okay, so here is TradingView. So if you look at that dollar index, right, you've got this dollar index that's, right now to me, it's back on an upswing. Granted, it's not super aggressive, but it looks like we're trending higher. Even with all the printing we've done, that dollar just kind of keeps on trucking to the upside. So let it stay above that moving average, keep on going, and you can put whatever moving average you want. The 20, the 50, doesn't matter. They're still pointing to the upside. The 20 might slow down just a little bit, but they're still pointing to the upside. So as this dollar continues to rise, that means that foreigners can buy less and less oil. So if the dollar falls, they can buy a lot more of it. So a strong dollar doesn't necessarily help crude oil. Now, I think you're going to have other things impacting crude oil, and that to me is more political when you look at the outside world and kind of what Russia and OPEC is doing with production and production cuts. To me, that's much more manipulation to potentially choke out the U.S. So I might be okay with oil. I don't like USO for the same reason, Margaret, that I don't like BITO. And for the same reason I don't like the Valkyrie one. They're using futures contracts, and because Valkyrie or ProShares Bitcoin ETF got so big so quickly, they already split their portfolio into October and November. So you already have contango potential effect, and you're going to get price tracking errors in those ETFs. And the more stress they get, or the further out they buy on those months, you're going to have worse contango. I don't know. I just don't. I don't feel comfortable trading those. That's just me. And I've seen that kind of mess with me in the past when I've held a futures product like USO for a long period of time. All of a sudden, you're going, wait a minute. This doesn't track Bitcoin like it should, or it doesn't track oil like it should. It's off. Well, that's because of the contango effects and futures products and fees that are behind the scenes. As I mentioned, if you look at BITO, you're like, oh, okay, Bitcoin right now is trading at $62,600, right? Oh, okay, here's BITO trading at $40.58. How do I know that this is actually Bitcoin? I don't know what this is. This is some derivative. So fees are getting stuck in there. Contango's getting stuck in there. Backwardation, if it's in there, is going to get snuck into there. All sorts of other weird little shenanigans and different products are in here as well. Same thing for USO, right? It's U.S. oil fund. You're looking at futures products. So yeah, I just don't trust it. Don't trust them. Gas prices go to $4 here. We will have a '08 crash again. Richard, where do you... Oh, I was going to say North Carolina. Thank you. I was like, wait a minute, man. It's $4 out here already. Of course, most of us is taxes out here in the U.S. Why does a reserve currency create power? It just creates demand for your dollars. Because remember, if I have, let's just say euros, right? And I need to buy some gas. So I'm buying containers of gas. It's priced in U.S. dollars. So in theory, you convert your euros to dollars to buy that product. So what does it do? It creates demand for your fiat currency. So whoever's the reserve currency, most of the assets are going to be priced in your currency. And that means more demand for your dollars. So that's why. I like Stellar Lumen. My grocery store bills are clearly... Oh, Margaret, yeah, you were going to tell me which portfolio. I'd ask... Pat Boone beat you, he said... Yeah, Margaret, if he said Pat Boone beat you, he said to buy gold 10 years ago. Hey, look, a broken clock is right twice a day. I don't have a 10-year horizon. The only thing I have a 10-year horizon on right now is Bitcoin. And I would say 5 years for most of the cryptocurrency projects as a test to see how it will hold up. But I think you can pretty much buy Bitcoin at any price right now and hold it long term, and you're going to be fine. Let's see. What about... Dollar backed by U.S. military. Yep, that's the power right there. Most futures rate products don't work properly and trend towards zero. Yep, I agree, Adam. Especially once you get the triple leverage stuff. When you get those leverage ones, things get really fishy and wonky with the way they function. Not a fan of that at all. When you look at like FAX, FAZ, those financial ones, or the triple leverage stuff, I've seen that destroy more people than a bad Tesla trade. Speaking of which, you guys have been talking about Tesla. Let's check out that one because Tesla made the $1 trillion club today. Gigantic move up on Tesla. Huge. You had a 12.66% pop for Tesla today, which of course, as you can see here, we had that little ceiling drawn on it. Felt like it would pop. Actually, remember we talked about this at earnings. I thought that on earnings it would actually gap up and do a bull trap and come ripping back down. I didn't. Just kept on ripping today. Tesla just phenomenal move up there. And I know that Don loves that. Don Fron here with us. He's a big Tesla bull. I don't know if you were. I think you're probably back on it with that trend. How can you not be? Let's see. What else do we have? And you know why? It's because Hertz. You gotta love your Robinhood. One of the most popular stocks at Robinhood was Hertz declaring bankruptcy. They basically said they're gonna buy 100,000 electric vehicles. So there you go. That'll help with demand. Jump price significantly right there. Okay. Yeah, he made $36 billion today. It's great. I'm all excited because I got out of my VIH or BAT, and made a couple of grand on that one. And Elon Musk made $36 billion for doing nothing. All right, let's see. What else do I got here? Crude oil, $200 or Bitcoin, 200,000 first hit the mark. Ooh, that's a great one, Jerry. Oh, boy. Huh. That's tough. Let me see here. I'd have to put it into perspective. I think both of those are pretty good calls. I think Bitcoin, 200,000 before crude oil hits 200. I just don't see crude oil getting that lofty. Here's the monthly of it, right? I mean, the highest we've got on record back here in 20 was what? Got your high of 147. To get to 200 would be a pretty monstrous move, and I'll see what that percentage might look like here just for fun since we can and we got the time. So let's go up to 200 here, which is right about there. It's 203. So what would our percentage gain be? What do you guys think? What do you think is going to hit first? Do you think natural gas is going to hit $200 or Bitcoin 200,000? Let me know what you guys think as I draw this for you to get some perspective of where we're at right now. So to get all the way up there on crude oil, that's a 156% move. Let me make sure I'm at the right spot. From where we are today, it's 139%. Okay? And remember, that's a commodity that doesn't really suffer from scarcity like Bitcoin does. Now, if I go to Bitcoin here, and I do the same thing, but I put 200,000 on this, it's going to be a bigger percentage move, but let's see right there. Let's see, 200,000 is right. Come on, right there. It's 218%. So 139% for CL to get up there, and 218% for Bitcoin. I will gladly take anybody's bet on that one. I'll take Bitcoin 200,000. Way before crude oil hits 200 bucks a barrel. And here's why. Bitcoin hitting 200,000 per coin doesn't impact global economies. It doesn't impact your day-to-day lives. Crude oil hits 200 bucks per barrel. It's impacting everybody's life around the world. So for me, there's no way. There's just no way that I think you'd almost go to a war before you get crude oil getting up to 200 bucks per barrel. That'd be crazy. It's better be Bitcoin and natural gas has been on the tear though. Howdy. Been some great moves for it. Here's natural gas up 13% on the day. It's funny because on October 11th, John Rowland was on here. He says $8. You guys might remember that. I put it on here. I'm labeling when I have guests say specific targets or calls just for fun. You know, why not? You've got all of a sudden this big move today. Actually, the last couple months have been just phenomenal for natural gas. But huge move up here. 13 bucks a day. 13 bucks. Let's go to your daily. There you go. So 13% today alone. We are still coming back into those highs that we saw about 3 weeks ago. But John Rowland could be spot on with his $8 target here in no time. What's Merlin being for Halloween? I can't show you. I might wear my it's really one of the simplest costumes I've ever made in my life. But it's actually the easy way out. It's not as exciting. I know those of you who follow me know that I love making costumes. I just have not had time to make an extensive Halloween costume this year. I apologize, but it is what it is. And today is not the 22nd, Merlin. Talk about slacker. It's what I get for going out to a concert till midnight in Los Angeles. There we go. Yeah, so, and again, I dumped Boyle today, even though it feels strong and keeps running. I had a pretty substantial winner on Boyle, so I decided to get out of that one as well. Now, I will wear it probably... When's Halloween? Halloween's Sunday. I'm back from Vegas on Tuesday, so I'll wear it on Tuesday for you guys just so you can see that one. It's kind of fun. Yep, exactly. Higher prices. All right, what other questions you guys got for me? I'm going to wrap up here. I make so much money on these moves, but when I see it on the charts, I still get... Yeah, right? And Don, you've been doing this a while too. You know that it really boils down to psychology. And for me, you know, you look at, especially today. Today was just comical when you look at Backed, right? I've been in this dog for months from 15 bucks, you know, and it was just pissing me off. I was so upset about this one. And I actually was more upset that some of you were like, oh, I'll jump on it too. And I knew that some of you lost money. And it's really, it hurt. Kind of pissed me off, I'll be honest. But you get a move like today, and it's so funny because I dumped, it's 17 and a nickel. So where's my 1705? Right there, the second one. So basically, that's all profit. Like, you got to be kidding me. Look what it did the rest of the day. Oh, yeah. It's just part of the beast, you know. Oh, well, it is what it is. Move on and call it a day. I went to go see Fish, Simon. As those that don't know, I'm a huge Fish fan, so I went to go see Fish at the Forum in Los Angeles last night, and then I will be in Vegas Thursday, Friday, Saturday, and Sunday for Fish concerts as well. Yes, I've seen them well over 120 times, and I will continue for as long as those guys continue to play. If you haven't, if you're into real musicians and just an incredible vibe, go check it out. Hey, all right, cool, Medic. Got in at 13, sold at 16. Cool, you made $3 per share. Nothing to be mad at except maybe the duration, how long you had to hold it to get there. Frank Chapman says, wage inflation is never transitory. I can't pay my employees less next year than yeah, right? Wages only go up. Yes, Kevin, I think what you sent arrived. I actually got a couple emails from you guys. Thank you for those that are sending me gifts. You don't need to send me gifts. I do appreciate it. If they're whiskey, I'll be drinking them on the shows on Friday. But thank you so much. I have to go to the office tomorrow, so I'll go check that out. NJ says, what do I think of Vale? Well, from a... Oops. How about I bring the chart up for you and type in the right symbol. And I will make this a daily one. Just from a pure technical perspective, not enough for me to make decisions on, right? It's, you know, I'm not a fan of stocks that have very little history. And you can see there's not much there for me to go off of. I still don't have strong supply or demand zones to play with. For those that don't know, when you look at Vale, you are an international basic materials, metals mining type of company with Vale. I like the company, especially from an infrastructure perspective, but I just don't see history there for me to make a decision on that one. And I generally have to have history for me to make technical decisions. But Adam, what's your opinion of the uranium sector? I don't know anything about it. I don't know anything about uranium. It's funny, I've actually had guests on the program that are, big time floor trader, futures traders, and we brought up that same question. Are you sure? It's VALE, right? Tell me the right ticker symbol. Maybe I got the wrong one. I'm pretty sure that's Vale. Unfortunately, I don't have watermarks on this one. Is it 45 right now? Oh, man. Don't rub it in, guys. I made my $2,000. Just let me be happy with $2,000, okay? I could have made an extra $20,000 or $18,000 if I just left it open, but I didn't. Oh, well. What ends inflation like we were seeing? Have you ever seen inflation like this before? I have, Leonard, but I was too small. I was a kid, so back in the 80s, I didn't understand any of this stuff. Now, as an adult, I understand it. What's the cure for it? There's two main cures. You raise interest rates to slow it down, and you remove money supply. But again, we've put in $32 trillion. We have more debt than we've ever had. How do you all of a sudden stop that? How do you tell the world, or the United States anyway, we're not going to be buying mortgage-backed securities, we're not going to be buying treasuries, we're not going to be buying corporate debt, we're not going to be doing stimulus, we're not going to pump money in the economy to try to prop it up and keep it floated. Once you stop that, then it all comes crashing down, which is kind of the moment I've been waiting for, honestly. I'm waiting for this house of cards to just come collapsing down, but it just has not. I've called it a few times. I put my money on the line a few times. I've been stung a few times with shorts. At some point, my shorts will nail it, and I'll be doing very well. But, to me, what ends inflation are the things that will bring these markets down. And that's raising rates or removing money supply. Let's see. Well, Adam, with anything, never be surprised by a price of a security. Don't be surprised by Bitcoin, 100,000. It just simply goes to supply, or how many of them are out there. If you look at something, again, like Shiba Inu, you have a quadrillion of them out there. Like, oh, it's trading at less than a penny. Yeah, because there's a quadrillion of them out there. So, and I agree with Jerry. Jerry says if we default, all hell breaks loose. 100%. I think if we default, then our economy is going to collapse, which is why it won't happen. They won't let us default. They'll just keep printing money. That's next year, March. What, the default? Don, you think we're going to default? I don't think so. I don't think there's any way in hell they can let that happen. They'll print money. They'll go through hyperinflation rather than let us default. Let's see. Do you understand the argument that Cathie Wood's against inflation because of money turnover? No, I don't know if I follow. I don't really follow Cathie Wood, so I don't know what she was talking about, but I just follow her because she's coming out with a Bitcoin ETF or trying to. All right, guys, that's it for me. I have to get running because I got a 3 o'clock I got to jump onto. If you guys want anything discussed with Bill Addis on Wednesday's show, again, I'm not doing one tomorrow because on the day that we were born, we were pampered and taken care of all day by other people, which means I am not working tomorrow. Yeah, we're not working tomorrow, so I will be enjoying, hopefully, a not rainy Southern California day, but I will see you guys all on Wednesday. If you want me to cover anything with Bill Addis, email me, TraderMerlin@gmail.com. I'm happy to go over any topics. He wants to talk about bonds, of course, but I think he feels like he's getting a bad rap for bonds being a good thing. He told me, he goes, bonds suck. And I was like, wow, bonds suck? That might be our topic for them. All right. Cool. All right, everybody. Well, that was fun. Hopefully you didn't miss me too bad. I apologize for taking so much time off, but hey, guys got to have a life too. So cheers to that. Thank you for those that sent me packages. I do appreciate that. I'll go get those tomorrow at the office. Until then, happy trading, everybody. I will see you on Wednesday's show with Bill Addis.